Good morning, guys. Welcome to this Monday, March 3rd. So we wrapped up January, we wrapped up February. February ended up with a big, it actually ended with a big melt up, but it's going into it was a pretty gnarly freaking end of the month. That's for sure. So a lot of weakness at the end of February. Right there, going into the very end, we had that massive melt up right into the close. And so far, they look like they're holding on to those levels. They're grinding a little bit back and forth there, but they're pretty much holding on. You see this big melt up right there? They just popped it right up here pretty late in the game. I mean, the day was fairly strong. We're going to drag it down a little bit, like so. Uh, we were holding on to the games, we were trading towards the upper end of the range, and this whole thing, this last little pop here from the 5900s up to the 5970, almost 70 points in this last freaking half hour. That was crazy. So anyway, so that's how we ended up February. Now going into this month, last month of the quarter, and this week we get the employment situation today, this morning. And the news is nothing at 8:30, but at 9:45 we get PMI manufacturing. At 10 o'clock we get ISM and construction spending, all of which potentially could move the market. Depends on how they come out. Tomorrow it's no news Tuesday. Wednesday we get a little bit. We have the ADP report, mortgage apps, PMI composite, factory orders, ISM services, a fair amount of news on Wednesday. Thursday, international trade jobless claims productivity. That's about it. Not crazy amounts of news on Thursday. And then on Friday is a doozy. We have employment situation in the morning, and we have like six speakers, no, five speakers, and then Powell speaking on Friday. So Friday could be an interesting one. So that's how what we have got lined up for us this week. I'm going to start off range bound with slight bias to the upside. See if this move, the late melt up, is going to have some kind of continuation effect. There's a shift of the month, so end of February going into March. It could be a dynamic involved there. It looks like bargain hunting going into the month, so expecting a little bit stronger part of March. But the beginning of March could also be pretty weak. So we'll just going to have to take that as or play that by ear. But at this point, we are right back up here to this middle range again. So from being on the verge to break the lows and potentially start extending into territory, which would be pretty darn ugly. We are right back to this distribution area, or to this distribution where we spent a little bit of time. So I'm going to start off with looking with a slight bias to the upside to see if you can start if this move we had late on Friday, if there's some continuation to it. And if that doesn't happen, we just go back range bound, going back and forth in this range, see if the market is going to try to take this lower, retrace these single prints, or if is it really if there really is a move to or a willingness to take this market and back up again and challenge this 6,015 to the 6,040 area. So we'll see. If they can clear that 6,045 again, I'll be modestly optimistic on the long side and see if they can start running it up here and start testing the 6,100s. And if they start taking out these lows, the 5940 to 50s again, and I'm thinking that we may see another test of the lows again. But it's a pretty good move. The last we had one big move here heading down. They were down here. The first run down here took it down to the 58.69. The next day, they took it lower, a little bit lower, but it's still in that retest territory. So I'm still thinking that this could be a very good retest. And now the retest failed spectacularly, and we're right back up again. So modestly optimistic on the long side to get started. Let's see if they can get some continuation on that move from Friday. And if that doesn't happen, I just go back range bound and expect them to trade in that range. And as you can see, the area to pay attention to at that point is going to be this area, the 59. These two support area, 59.50 and 59.30, these two support areas. And then, of course, the 6,015 to 45s on the upper end of this range. So we're trading right smack in the middle of that right now. So we'll see how that goes. But starting off, at least this morning. I'm going to start from the long side, looking to buy 59.80s, 70s down to the 55s, 59.55s for rotations back up. If they start taking out that London low, I'll take off the long bias and just go back range bound. If they start challenging the 50s and the 30s, well, then we know that we may have a problem on our hands. But given this move up here Friday, would not be surprised if we see an attempt to retrace this. But we'll see. It's a new month, and it's if the February was all about rotating back and forth into portfolio and creating all that weakness, March could certainly be the start of something. Remember, a couple of years back, we had that pretty much exact same setup. They see a lot of weakness in February. It looked pretty freaking gnarly, and then starting in early March, sometimes we had this spectacular 2-month rally going into June, May, June. So we'll see how it plays out. But at this point, I'm going to start off with a slight bias to the upside. I'm going to buy weakness against the 59.80s, 70s down to the 55s for rotations back up. Below 55s, I'll take off the long bias. And also, if we get into the latter half of the day, we'll do that when we get there. But if they're not moving by midday, then we may just have to go back range bound as well. On the way up, and looking to get short against resistance at this point against the 59.95s, this 6,005s, 6,015s, 6,025s for rotations back down. Above 6,025, so I'm going to probably lean in on the long side a little bit more. Still looking for shorts against the 35s and the 45s. And if both of these two comes out, I think we are on our way at that point. So this is a bit of range on the upside. I think the better resistance comes early on here. So I guess that the 15s and the 25s, if those two comes out, I think probably lean in on the long side a little bit more aggressively. Still looking for potential shorts against that 35 and 45, just a little bit less aggressively at that point. All right, so that's how we get started on the ES. Let's see if we get continuation on that move from Friday. If we don't, we probably can either find ourselves in a sideways kind of a day. It's not much news to drive the market. Well, it's a little bit of news today, but at 9:45 and 10. And if that doesn't move the market, then probably going to sit here sideways. And we'll see if the appetite of the bears to take this lower is going to kick in or not. And we'll find out pretty quick if this lower edge, the 30s comes out, 59.30s, I would lean in on the short side and see how far they can run it lower at that point. So that's how we get started. Let's see how this develops. Looking at the Nasdaq and the bonds, the bond market hasn't really moved a whole lot. So not a whole lot to say, but then they're pretty much holding this range again. They're to the upper end of the range, as we said yesterday, or the last few days, they've been slowly grinding this to the upside. So I would start range bound, if anything, a slight bias to the upside. But if this turns into a little bit of a rally, I think that flight to safety we saw a few days back may turn into a retracement back on the bonds here. And that would mean we probably mean that we see a retracement back to that 116.08 attractor here on the capital flow. So that would be more, this whole move to the upside was more a flight to safety kind of move. And so I said, if it looks like we're getting a rally developing, yeah, well, I would expect the bonds probably rotate back down to the 16.08. We'll see how that develops. But at this point, that's kind of where we are. If for some reason weakness continues and this little strength we saw late Friday just turns into nothing and it just starts heading lower again, I think the bond market holds pretty much where it's at, maybe even trades higher. So we'll see how that pans out. But at this point, that's how we get started. We can buy weakness, 17.22s, 16s, down to that 17.10s. And if they start taking out that 17.708, 6 to 8 support area, that will be the fourth one down. At that point, I think they're heading back to 16.08. So we're going to get long against the 16.18s, or 16.17s, 10.11s, and 6 to 8s here for rotations back up again. On the way up, looking for shorts against 28s, 1802, 1806s for rotations back down. The last one would be 1812. And if that comes out, probably looking for a move to the upside at that point. But on the long side, a little bit less aggressive on the shorts here because it's we are leaning slightly to the long side of the market. And you can see this overnight looks pretty good, right? Definitely looks like the market is trying to take this higher. But the overnight is also just the overnight. So once the day session kicks in, we'll see what the real story is. Late run up here on Friday as well. Not as big as the ES, but pretty good on the Nasdaq. And you look at capital flow on the Nasdaq. They're not quite, they're barely up in this upper range again, right? So Nasdaq got a little bit of work to do because there you see how far they took it on the downside. They were almost done here retesting this area of support. So Nasdaq is the one to watch if they start coming apart again. And this whole area of congestion just got a lot wider because these guys probed it quite a bit. So this is really this whole area of they've been trading it back and forth, turning into an area of congestion. They're down here probing it every time, but it's 20,400 up to the 900. It's a 500-point range, and it's been not super well defined. They're probing it, and you can see it's like they shoot down into this area and then get rejected. But so far this area is getting bought, but it is pretty wide, and so far they have not been able to really get back up into this upper area. Getting back to that 21,200 is really what they need to do. So we'll see, but I'm starting off with a slight bias to the upside. If they start heading down below these areas of support, and at this point, I would just look at the session low. So looking at that 880 level, so that level comes out, I would start thinking shorts out of the market or looking for a retracement trade. Initially looking to buy against the weakness, the 21,030s, 980s, 950s, down to the 890 to 900s here. And if that 20,890 comes out, I would just look for potential move to the downside at that point. It backs off pretty good if that happens. So we'll see. But I mean, they can certainly back off this much. It's what is it? Like 2170 to yes, like maybe 300 points. That can happen pretty quick. So and if they start extending, I'm looking for a run up here to the 21,200s, and that 200s is certainly where I expected this high volume area, expected to stall there for a bit. But that's where I think they have a shot of going. And if they do that, I think we are definitely back in the middle of that range again. So initially, let's see if they can get continuation from Friday's little pop. Going to buy weakness below the 890s, take off that long bias and look for potential for another little attempt to take this lower. So not going to be buying anything below the 890s at that point. And on the way up, looking for short setups against the 60s, 100s, 160s up to the 200, 210s here for rotations back down. And not going to be super aggressive in getting short against these. The better short may come here around the 200 and the 250s, these two resistance areas. And that would be pretty much consistent with running up and stalling here, but not going to expect big shorts out of those at this point. So we'll see if they can make it up. If not, any of these shorts on the way up potentially could hold. And we see it all the time. They start off strong. You see everything looks positive, and then the algos just lean into it, and you see how they just absolutely take the market down. So we'll see. It's the volatility and the range of these rotations back and forth in the stock market has been pretty crazy, and it's a lot. It's just depending on algo trading. And algos kick in, they pile on, and it's just relentless. So you can't look at your stocks and your IRA and wonder like this goes up like 10, 15% one day and then down 15% the next. That's just how it is now, I guess. So that's how we get started on the Nasdaq. Watch the lower areas, the 890s. The last one would be 850s. Those are support areas, but below 890s, I'm taking off my long bias. And on the way up, looking for shorts. The best ones, I think, is going to come at the 200s or 255s here. Now, on the way up, anything could potentially hold, but I'm not going to be super aggressive on it. All right, so that's the Nasdaq. I think Nasdaq is the one to watch in terms of where they're going to go. These big tech companies, they see how the accumulation is going to go on those, if at all. Oil and gold. So where did I go? Did I go back to the ES? I went back to the ES. What the heck? What the heck? I'll go there. There you go, oil and gold. There we go. So gold. I sent a rollover email out as well. It's no, I'm going to send it out. I send something out by the daylight saving time things. So make sure you upgrade software before daylight savings time. There may be an issue on the CQG on that one, so we'll see. So gold was way down here. They're probably below that 880 level, yeah, on Friday. Now they're right back reverse retesting it. So they're not quite out of the woods yet. They're just reverse retesting this edge right now. So they need to get up above that 88, 80, 85s. They're pretty much trading in that range right now. So the chart is good for them to do it, but if they can't, we may see gold retrace and maybe even test this gap here, that little gap up from the 2800s. That would be a pretty good test of support. But a fairly big low volume area in front of us, right? So that's it could stall anyway on the way down here. You have a potential ledge here at the 37, 38s, at the 26s, at the 2800s, and then you have the gap. So we'll see where they're going to go. But if they start heading lower, I would be trying to trade that on a short side. I think that it could take it quite a bit lower. So they're going to get short against strength on gold. And they're looking for early strength, but I'm not quite there the way I'm thinking that the looking for continuation to the upside or anything like that. I'm looking for early strength to get short. So against the 889 to 90s, against the 2896s up to the 2905s, rotations back down. So in this area here, looking for short setups. If they can clear the 2895s, 96s, I would probably take off the look, stop looking for shorts very aggressively. But the last one I would consider is this 2905s. So if you see a little bit of strength going higher, it could be a nice look for nice short setups for a potential move lower again. Now, if they cleared both the 95s, 95, 96s, and the 2905s, I think we're right back up in this upper range again, and that probe to the downside has been reversed at that point. So we'll see if that develops or not. But at this point, it feels very much like a reverse retest of this area of resistance. And it used to be pretty good support. Now it's going to be resistance. And if that holds, we could very well see moves to the downside here. Early on, looking to buy weakness at the 79s, 75s, down to the 70s. Not very aggressively. So if you see some early weakness, could very well be that they take it a bit lower before they try to run it higher. But I mean, I would not be super aggressive on those. Looking for a good setup and a trigger, and below the 70s here, definitely at that point in on the short side to see if I can take it on the downside at that point. So if there for some reason you see some early weakness, looking for those looking to get long against those three levels, but not super aggressively. Since I really prefer to see that early strength. So if you see that weakness developing, we could certainly keep going. So I would keep a tight stop on that in case they keep going lower. All right, so that's gold. And then finally oil. Holding in that range again. They're back down. They're holding in that lower range. And I think oil is just going to probably sit around here for a bit, consolidating that back in its lower range again. And building value, high volume area, and we look for potential breakdowns below 67s or moves higher above that 72 level. So in between, just traded as a range bound market at this point. Structurally, it's heading lower, so I would prefer the short side if anything. So net short side until that move has happened and they're really taking the energy prices down. That's when I would be a little bit more balanced about it. But at this point, prices, I think they're expecting prices to come down at least $20 or something, down to the 50s, 40, 50s. So looking to sell strength at this point, 70 20s, 70 50s, 70 80s, rotations back down. They're going to buy again that's going to be 69 75s, 69 20s, 68 75s, 68 50s for rotations back up again. So that's trading that range. If they start taking it higher, shorts again 71, 60, and 72, it's just fine to look for as well. Maybe a little bit less aggressively, and the same thing looking to buy below the 68 at 67 90, 67, 70, and so on and so forth. But first 3 levels up, 3 levels down, get started that way, and then we'll see. To start breaking out of that, there could be a directional move happening. So that's when you start considering a directional move. But at this point, just trade it as a range band market. All right. So that's oil. Well, we're not going to be super aggressive on oil, but gold could have a nice potential short setup opportunity. ES and back to the ES. So ES and Nasdaq, both of them, we are looking for potential continuation to the upside, given the Friday little melt up. But if that turns into be just that, a little melt up going into the end of the month, then it could get quickly reversed. So if that happens, they'll be taking out that 59.55s, the session lows or the London low pretty quick, and or when they take it out, it's going to be feeling pretty weak. So at that point, just start looking at the short side. All right, so starting off, looking to buy that early weakness for rotations back up, see if we get continuation, and let's see if that develops. All right, so let's see how this month's going to start. I'm going to wrap it there for now, guys. So good trading, and I will see you back at oops, that's not the one I wanted. At 11:30 for the next update. All right, guys, later.